Don't let her out. Leave her in there. Just leave her alone. That's what I'm saying. Just stay away from her. She's going to think you're going to let her out of the kennel. This is all the stuff that usually gets cut out of a pre-recorded video. But we're live, so it is what it is. But you have the same situation and same circumstances that he has. The only advantage is that I'm not going to let him fail. You have to earn yours. The work that you put into it, you're going to have to earn all of that. And when you earn it, you should feel good about it. When you understand yourself and you understand the market and how you're going to engage it, don't even invite other people in the conversation. Don't say, this is what I'm doing. Like, as soon as you start showing your results on social media, unless you're aiming to be a streamer and have a source of income like that, then okay, yeah, it makes sense that you're going to show what you're doing online. But unless you're doing that, showing the world through social media what your trade was, unless you're teaching, and if you're teaching my stuff, it's kind of like cringy to me because none of you should be trying to teach my stuff, to be honest with you. I mean, it's just the way it is. But assuming you're a teacher, then it makes sense. Here's what I did in the market, or here's how I'm trading, or this is how I traded this. Okay, that's wonderful. But apart from that, if you're just trying to learn how to trade, you should never be showing anybody on the internet what you're doing. Because the chances of you getting the cheerleading that you subconsciously want to hear, like, wow, you did good, that's what you're wanting. Subconsciously, that's what you want. And I've told Caleb, don't you ever fucking do that. The only time you're going to see what he's doing is on his YouTube channel where I sit down with him. I sit down with him and I say, show me what your notes are. Show me what you observed. And you're going to hear it. You're going to hear him talk about what he feels struggles with. You're going to hear him talk about where he thinks he's making a little bit of progress, or maybe he's not making any progress. He's going to say it as he feels it and what he's experiencing. And I'm going to ask him to talk a little bit about what it feels like working 12-hour days. Working 12 hours, commuting, and doing this. And you're going to think, wow, his dad's ICT and he's still putting him through the mill. You're fucking right, I am. Because there's no better way of learning it. You want to eat shit the rest of your life and have somebody tell you how much you're going to earn and when you got to do it? Well, go ahead. Go work. But you have to know what it feels like to avoid it. And that means once you start making money, you won't take stupid risks because you'll end up in that same situation because dad's not bailing your ass out. You go on your own steam that you earned. You make your own money that you earned. When you make it your way, by your own hands, you'll care more about it. You won't be frivolous with it. You won't take silly risks and over leverage. Well, I've been doing real good for the last 4 months. It's time to over leverage. It says I can do 15 contracts, so fuck it, let's do it. No. Because you don't want to end up in that same situation where you got to go back to only expecting the money that comes to you on a week-by-week basis by doing 50 plus hours a week. Doing something that you don't really want to do. That is the catalyst. See, instead of hating your job, you should be thankful you have the job because that's the motivator. It's not me talking to you. The only thing I'm doing is making you think about it. Like, yeah, if I don't really make a change today or work towards making a change, what's going to change? The date. The date on the calendar, that's what's going to change. Nothing else is changing. You're not going to move up. You're not going to move down. You might move down, might move out the door. They might do away with you. You may be fired. You may not get a promotion. Think about it. So if you made the decision to be here and learn how to do this stuff, I commend you. Because I'm not going to sugarcoat shit. I'm going to tell you just the way it is. You're not going to like it most of the times the way it's been taught to you. But this is the way it needs to be this way. It needs to be like this. Because when you earn it, your motivation and goal should be, I don't ever want to hear this motherfucker talk to me about trading or looking at price action ever again. I want to know that I know, and I ain't got to worry about listening to anybody else, least of which ICT. And I don't take that as a disrespect. That's graduation. That is graduating. When you no longer give two shits what ICT is saying because you already know what I'm going to say. You already know where the market's going to go. You already know if I was sitting in front of you and saying, watch this right here, watch this right here. You already know that. And you're already in that trade, already taking partials. You've already closed the trade. And other people are just sitting there looking at the fucking chart, staring at it. No idea what's going on. No idea where it's going. All the multiple opportunities to enter into a trade, they're clueless. And you've already ran a clinic on it. And you've done more in an hour of trading than they'll do in a whole week with a myriad of losses across the board. And you've done one trade a day and you're content and you're making people's salaries. Hello. You don't need to be cheerleaded when you know what you're doing. You don't need to ask anybody outside of you when you know what you're doing. You never go onto social media and ask for validation. That's a sign of success and maturity. Anybody that's posting stuff, unless they're an educator and they're just giving examples of it, they're literally just asking you to fill the void of something they cannot feel and get from their own accomplishments in trading. And if that didn't hit and resonate with you, listen to it again. Because that's exactly what social media has done. It's fostered this environment for people that have no reason to ever expect any clout to chase after it. And when they see somebody else that has more of it, they're going to shit on them because they think that elevates them. It doesn't. So don't even get into the fray of that. Don't even worry about it. Stay out of that. Like I told my son, Caleb, don't fucking do anything on social media. Your YouTube channel is the only thing. You don't do anything on Instagram. You don't do anything on Twitter. You don't do anything on Facebook. You have one presence. It's on YouTube. Nobody can pretend to be you because they're all going to know this is the only place that you're going to speak from. It makes it easy to manage. You're not asking people's opinions. You're not asking for, hey, what do you want me to do? Fuck everybody else's opinion. The only one you need to worry about is mine. This is it. I'm the drill sergeant. You're fucking in boot camp. And this is the way it is. You're going to eat the shit I put in front of you. You're going to eat it. You're going to say, thank you. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Never, no, sir. You're going to log and you're going to repeat it. And then when I tell you to do something extra, then you're going to aim for that. But you're going to continuously do everything else I told you. That's the process. That's the work. That's what every failed ICT student has never really did. And we'll see what your progress is. You're going through the same thing that he's going through. And some of you already feel the changes, already see the progress. You already think about it differently. And I'm encouraged because I see people saying, hey, I used to panic and worry about taking a trade, and now I love watching price action. It's fascinating to see what it's doing. It literally is marching to what you said, right? And it will do the same thing when you understand more. It will feel like you carry it on a leash. You're walking it. That's what it feels like. And it's hard to get surprised. And if you're not being surprised at what price is doing, what are you? You're bored. Because you know what you're waiting for. You know. You know that you know. And no one can take that from you. Once you get to that level, these live streams are going to be so much more immersive. And it'll be a whole different experience. Right now, you're just floundering around if you're brand new. And I know, but don't be discouraged. That's normal for you to feel like that. It's absolutely normal. It would be something altogether different if we weren't able to see things happening before it happened. Then it'd be like, oh yeah, it's justified. Just unplug and don't come back. But you can't say that. You're seeing things that are wonderfully illustrated, has context, has a narrative as to why it should do certain things and not do other things. And that is real mentoring. That is what it feels like to learn properly from a proper teacher, from a proper mentor with real experience. If they don't have the ability to do this, and they're not willing to do this, that's the biggest red flag to say, you know what? Have a good day. I wish you nothing but luck, but I gotta go. And no, you're not having any money from me. There it is, it's done. And I'm gonna get all kinds of new level hate placed against me now because people are doing what I'm making a case against today, saying that, if you're teaching, you better be able to do this. If you're not comfortable out here, and I think you can hear my tone of my voice, like I'm not hopped up on anxiety, I'm not hopped up on fear. Like, I'm literally telling you what you should focus on and how the market should behave and deliver, and the things to focus on and how it should start the runs, where it should reach to, all those types of things. Because it's stuff I do every single day. And some of you, because you're really, really weak, you're weak-minded, weak-hearted, you want me to trade in front of you. And that's the only thing of any benefit, is because you want to be able to copy me. And it's not a cop-out for you to say, oh, that's your excuse. No, you want to do something where you're mimicking me, and you think that that is you learning how to do it. The only thing that does is, if I did that for 1 week, it would create such a level of codependence in everyone that was watching it. They would never feel comfortable doing it in their own development, in their own natural progression going through the content. Any adversity after that would be enough for them to say, fuck it, I can't do it. And then you'd hate me because I wouldn't be doing live streams. When I'm promoting you as the driver, I'm just teaching you how to drive, how to navigate. And you're going to find the quickest route to where you deem success. But you got to give yourself the permission to go at the pace that you will discover is perfect for you. You don't have to rush through these lectures. Nobody says you have to be on the same lecture that we're doing right now. If you're panicked that you're rushing through them just to stay up to date, you're wasting so much opportunity to do it correctly. You have the benefit of watching it as if it were live. That's why I'm using the 1 minute chart. You have every advantage of being here live and have no dependency on you being here live. The same measure of experience is the same measure of experience if anybody's watching it live. It's live streamed. There's tens of thousands of people watching them. There's so many other witnesses to watch when it's occurring that, yeah, this really did happen. It really was explained beforehand. It's the repeating logic that he keeps talking about, and it's repetitious. And you may think and say to yourself, he keeps repeating himself. That's good. Repetition is the hallmark of recognition. It has to be repetition. How many times did you work out in the gym and curl the bicep? Oh, fuck this. I've already done it 10 times. I'm not going to do 4 more sets of this shit. I've already done this. You got to go through it because it's ingrained. It's in your subconscious. You don't want to be thinking about reaching for information while you're watching price. It needs to be automatic, just like that. Like when I took that trade yesterday, automatic. I was like, oh, fuck this. I ain't worried about making the box look pretty. I know what I got to do. I got to enter an order right now, because if I don't do it, it may take off and run without me. That's because I've done this for 30 years. I have done this over and over and over again. And I also know what it's like to get that, oh, it's going to do, and then sit on it and wait too long, and then it runs away. So I know what I'm supposed to do. I got to react. I got to say, okay, I'm looking for this, but now it's done this. So if I want to take a trade, it's in the PD array I would be using right now. So I got to do it on a stop. I can't use a limit order because I'm already in the middle of a very small little range. So how am I going to be able to finesse a limit order? I might as well just do a market order. But I don't want that. I want to be able to buy as it's leaving the lower half of that inversion fair value gap. And that's why I elected to use a buy on the stop. Because we're learning how the entries form, the patterns, and how you enter your limit order for the fair value gaps, Caleb. That's what we're introducing here. Next week, we're going to talk about things that are going to be problematic for the trade being effective. So it might look like it's in the marketplace. It may be a viable trade, but when do you stand down and say, I'm not taking that one. I'll just paper trade it or tape read it. Very, very important information next week. And I guarantee you the viewership is going to be the least. It's going to be the lowest. And it's going to be the same people that don't watch that on those lectures next week. They're the same people that will be either in anonymity or openly on the internet saying this stuff doesn't work, because they don't want to learn how to make sure that they're trading the environments that have the highest probability. They're lessons that I had never intended to ever teach. And because my son's making an effort to do this, I want him to have all the advantages of knowing when and when not to. It doesn't mean it's going to be easy, but these are the things that I do that helps me focus on the best. Think about it. Wouldn't you want that information? Wouldn't you want to know what are the things that's going to be in my way that I'm going to fall a victim to? And how do I cope with that? How do I navigate that? Because these are all things that I fell victim to and blew an account with. Every single lecture I go to give next week, if I didn't learn those lessons, I never would be able to do what you see me do. I can see it before it happens. I can outline it. And as long as you can see it and outline it, all you need to know is where you're going to get in at. And that's easy. That's the easy part. The hard part is knowing where it's going to go, when it's going to start going there, and what's the reasonable measure of retracement, if at all. If you could know those answers, entries are the easiest thing. But you're sweating it. I need to know how to get in. No, you don't. You need to know how to behave and how to manage yourself and your emotions and keep your psychology in a state of mind where you're not hopped up on goofballs and you're losing the plot because you're making money, or be fearful of any tiny little retracement thinking it's going to completely come back and knock you out. That's a very hard stage in trading. Like, you have to tackle that stuff early on, Caleb. Because if you don't, all the things that you do to try to prevent it makes it materialize sooner and more frequently. Trying to avoid a losing trade only ensures that you're going to take a losing trade sooner and more frequently. Because you're going to wait too long to engage. You're not going to take it when it seems so overwhelmingly obvious, but it's going to be scary. The right trades are always going to be the ones that you feel, I don't know, it's too good to be true. Let me wait. And then it starts running off, and you chase it, and you regret that you didn't get a good position. And you worry about not getting in that good position when you felt it first to get in, and you're not monitoring the trade. You're not watching the behaviors and signatures that price is still telling you it's still moving in your favor. And then because it starts spooling and you've been spending so much time worrying about that you didn't do it right and enter when you should have, and you chased it, and yeah, you're in profit right now, but now you're making profit. You're changing your mindset from beating yourself up about chasing price and not taking the entry mechanism that you look for, figure out you got an order block, whatever. And you switch over very abruptly to how much money you're making. And you don't even refer back to why you took the trade. And now you're worried about, should I get out? Should I get out? If I hold on to it and it turns around, so are you doing the right thing? No. And that's all the things that would pop up if I was out here doing entries every single day, every single live stream. I'm not making excuses for not taking trades. I'm going to be trading in front of you. But I'm trying to explain to the people that think they're going to try to use reverse psychology on me. I already know it's going to be detrimental to you if I do it. That's exactly what's going to happen. Because you're going to tap into 30 years of experience. Even if you copied me, you're not going to get the same result. Because as soon as you see any profit, you're going to be scared that I'm going to be wrong in front of the world. Or the market maker's going to run on his stop. Oh, shit. Calm down before I get all turned into 2 more hours. Let's just say this. We've had fun today. Okay? I've talked a lot. I've taught a lot. I've proved a lot. I've challenged you. I asked you, do you believe there's an algorithm that controls price? Or do you believe that buying and selling pressure causes the fluctuations to stop dead in its fucking tracks right here? Dead in its fucking tracks. The randomness of buying and selling pressure. The randomness of all of these trading disciplines. Elliott wave. Supply and demand. Wyckoff. Point and figure. Andrews pitchforks and Andrews median lines. Harmonic patterns. Ratio trades. Animal patterns. Butterflies, bats, shark, back patterns. How on earth, with all of that Mickey Mouse level bullshit, all those different disciplines of trading and what makes the trade go up and down for you as a trader, how on earth it takes more faith to believe in all of that shit, giving the results of where price stops and turns on a dime, that all of those disciplines and all of the randomness, and look, think about the random ebb and flow of how it feels when you're watching a live stream. I might say something that makes a really profound impact on your understanding, and then I go off on a tangent, and I start ranting about something, and you're like, fuck, would you get back on topic, ICT? I'm on topic, my topic. But then you get offended by something I said. And then I may give you some more information, okay? And then they're like, wow, yeah, I'm glad I stayed. I almost turned off the fucking live stream, but now I'm glad I stayed for that. That just made a whole lot of sense. I'm glad that. So what are you doing? You're having a random fluctuation of where you feel good, then you want to turn the stream off, then you're wishing you would have turned it off, but you stayed, and then now you're thinking, oh, I'm glad. So that random up and down, that's exactly what's going on with every trader when they're watching price action. Sometimes they're going to follow their model. Sometimes they're not. Sometimes they're going to demand that trade setup gives them a little bit more confirmation, and then they'll enter. That's not them trading with that logic. They're randomly reacting to price. And if you make any argument against that, you're full of fucking grade A bullshit, because the human mind isn't going to be able to stick to the rules all the time. This is my shit, and I still try to finesse it. I ain't going to hide that. I still try to finesse it. I always try to outperform my stuff. I always try to predict them before they form, because I want to try to be in there at a stellar level. I want to get in prices that are so fucking mind-boggling. Like, what the fuck? How did you do that? That's what I'm addicted to. I'm addicted to that moment of astonishment. As a magician, that was what I fell in love with when I first started doing magic tricks as a young man. I loved it when people's face would go, what? That reality of that blur between, did I just see what I just thought I saw? That is why I studied magic, card tricks, and sleight of hand, all that kind of stuff. And in trading, I wanted to be the fucking best. I didn't want anybody to say, yeah, you trade like, no. People say, wow, you're good. You resemble what ICT does in his trade. I can tell you're one of his students. But they never say ICT trades like, it is just I trade like me. And that was a goal for me. But if you're looking at these turns in price like this, and you're saying that the buying and selling pressure of everybody that's going to be trading at that given minute, they all somehow fucking came to some conclusion that the amount of buying and selling has to exhaust itself right at that level. It's the upper quadrant of our daily volume imbalance. After fulfilling a rebalance to the high of this fair value gap, which is a SIBI. Really? And it just happens to do the same shit here and here. And it just so happens to stop right here on this old new day opening gap high. It just so happens to trade down to the consequent encroachment of that over here. You're telling me you're gonna stand in a court and tell me, what evidence do you have? What evidence do you bring that says with unequivocal, it's without question, the effects of buying and selling, random buying and selling pressure with multiple mediums of why they're getting into a trade? You would fucking fail miserably doing that. But I can stand out here in front of you, in front of a court, any court, and call this shit just like it is here. And what do you think any fucking jury would say? Wow, there's some real precision shit going on right there. Yep, sure is. It's coded that way. It's absolutely coded that way. But see, what happens is, when people that don't know how to trade, Caleb, what I'm protecting you from, you're going to have trolls because you're my son. But you are going to have a lifestyle that they're never going to have. And you're going to have it by your own hands. And you're going to earn it. And nobody's ever going to be able to say anything to you and have it stick because you're earning it. I didn't give it to you. You're earning it. And I'm already proud that you're making this effort again. But when people try to talk shit to other people, especially in our camp here, they don't like the fact that we're overconfident. They don't like the fact that we will stand up real quick and say they're full of shit and their stuff isn't really what makes the market go around. And we can come out here and do things like this. And they're live streaming and they're saying there's no way that the ES is going to go above the high because there's correlation. These markets are correlated. That's the reason why it's going to go up there. So right there, you've proven. Say to me that you don't know how market correlation has impact on price by saying anything but that. Well, that's what he's done. Live streamer says, no, there's no way ES is going to take the high out. And I'm buying it. And it blows the lid off. Rallies straight on up. Now, I could have went on that live stream and shit on him in his chat after he made a video about me. But me and my private students, I had a little ribbing with them. It was just them knowing that I took a trade and faded him. But I do that with everybody. And it's fun. I don't mean to be mean-spirited. It's just to reinforce it to my students who've already been convinced that there is an algorithm. Nobody's going to convince them otherwise. But it's fun when you see other people out there that are just communicating that they have no real understanding and they're floundering. They're floundering and they're saying whatever makes them feel fucking good. And it makes a perfect allowance for their inability to be able to call price before it happens. The inability to know that they're going to have a winning setup tomorrow or next Monday. I know I'm going to have a winning setup between 2 o'clock and 2:30 p.m. on Tuesday, on Thursday, every fucking day. I know my trade's going to be there. I know it's going to be there. Can you say that with your fucking harmonic horse shit? Can you do that with your ratio patterns? Fuck no, you can't. You have to wait for your indicators to paint this bullshit on your chart. I already know. I already know when the market is going to move. I already know that. Every fucking day, I know when it's going to move. I have to be present when it's doing it. The risk has to be appropriate for me to enter the trade. The structure's got to imply that this is clearly where they're going to draw to because the market's already displaced, caused the smoothness to go away in one side, and now they're going to reach for the opposing liquidity, where it's already proven itself too smooth. Relative equal high, relative equal low. It's not complicated, folks. It's not complicated. So when you hear people talk about what we do here, it's entertaining. It's sad because they're selling themselves short. Instead of saying, there's nonsense, there's no algorithm that controls price. Like I said, the invitation's open. You're welcome to bring whatever Mickey Mouse horse shit, okay, and call the market live. And I'll be out here doing what I'm doing. And I promise you, you will never be in the same neighborhood. We're just easing into this. I haven't even pulled back the veil yet. Like, wait till you fucking see. Wait till you fucking see what I'm going to be doing. You have no idea. You have no idea. Jaws are going to be fucking breaking, okay? I'm telling you. Literally, you have no idea what you're about to see. And if you've been impressed with this and fascinated with the intricate details about how it's behaving like this is nothing. This is nothing. But you'll see. All right. Long goodbyes and all. That's how it is. I'm going to talk to you tomorrow, Lord willing. We'll start at around 9 o'clock if I can get everything set up and the stream works with me. OBS has been fickle with me, trying to get it to find my charts when I'm trying to set it up. But I'll talk to you tomorrow, Lord willing. Until then, be safe. Good morning, folks. I've been fighting with OBS for the last 20 minutes. I'm not sure why this thing is so fickle. It just does not want to cooperate with me. I don't know why, but either it doesn't want to show my screen or it doesn't want to show an audio. Or not show an audio, I guess pick up my audio. So good morning, good morning. Today we have the market opening up just really close to where we settled at here. So I'll show you. Let's see if I can do an audio check here first. Yep, I hear myself. All right. So the regular trading hours, if you go down here, right now it's on electronic trading hours. So we go to regular trading hours, and this is where we settled previous session, and this is where we opened. So to open at this level here, we have a small little discount gap. So this is the low. So now it's the opening range gap low. And settlement is what I label it until we get the actual open. When it's real close to it, pre-market before 9:30, as I'm watching it, I have this already annotated. So opening range gap high, because this is higher than when we opened up on regular trading session hours. Okay. Ready, so let's go back into electronic trading hours. And initially, I like to see if it makes any attempt. I'm going to grab T back up into here because he left that really smooth. And it just upset the sell side here. So here's buy side. Because we had a really small gap, I'm not all that excited about the initial morning session. Like I'm not overly bullish, overly bearish. I'm just indifferent right now. I just want to wait and see what the market gives me. This week, the focus on the lectures, Caleb, is to highlight areas that are going to be problematic. And one of those things is obviously today, where we have a very small minor gap. Okay, and the larger gaps that we open up with, they tend to kind of like invite larger volatility and a lot more protraction in the marketplace. And then we just did this area down here. Got a lot of feedback from Friday's live stream. I appreciate that. A lot of folks never saw someone call the daily high and the daily low and show a $200,000 framework in one trade, but we're just getting started. Hope you had a good weekend. I did. Very good weekend. All right, so now we have worked the sell side here. The market has gapped lower with the lower gap opening. We traded above the opening the opening range gap high, which is previous settlement. So Friday's day session settlement price. That's what this is here. We're working inside of the old new week opening gap on August 25th, 2024. Okay, and what I want to see is, do we have the ability to work one more time, taking out this low? Because it was a little shallow doing that. So if I were to kind of force myself to give you, if I had to anticipate right now what I thought was likely to occur, I think we're going to bang around between new day opening gap of August 21st and the opening range gap low until we discern what it wants to do. So I'm sitting still, I'm relaxing. I'm not worried about trying to be right about what I think it's going to do initially. My tendency is to look at what we have left over here. So these relative equal highs are just really, really, really smooth. Do they need to run up here today? No. Can't do it? Sure. I'd like to get the invitation to outline some kind of framework to get to that level, but focusing on the lecture premise this week is looking for things that are going to be problematic for your trade. In other words, what makes the idea of looking for setups harder, or once you have an opinion, okay, what makes it difficult to hold on to it, and what challenges will you find in doing that? Sticking to a bias or arriving at a bias, okay, that's kind of like one of the primary hurdles for most of you. And my son's no different. And it was the same thing for me when I first started learning how to do this in the 90s. Knowing where it's likely to go. And also trying to push away that impulse to, I got to know right now because the market's trading, so I have to get in it because you're fear of missing something. There's no reason for you to fear missing anything because the market's going to trade tomorrow, the market's going to trade on Wednesday and in perpetuity until the markets are no longer available to us. So don't worry about that. We have bigger problems if we can't trade, right? So we've worked the new week opening gap here. I liked how we've done this business in here. And any movement above here, I'm going to watch and see, does it use the new day opening gap on August 21st. So in other words, trade above it, come back down, and then aggressively run into this area up in here. It's really smooth. Now, I was looking at a 2-minute chart over here because you're probably wondering, like, why are you on a 2-minute chart, ICT? Why are you not talking about that? I was looking at the gap right in here. I was studying, do they use this as inversion? Initially they did, but they hammered the consequent encroachment of the new week opening gap of the 25th. And then we have the previous settlement. So it's returned back to that, then drop down, displaced below the relative equal lows. So sell side's been disturbed. It's all messed up now. And the market's seeking buy side, which it's already done by taking this one here. And this is a little smooth in here. They've already disrupted that. And in here, up to this high, that's where the short-term minor buy-side liquidity is. I'm watching this candle or the next to see if we can trade down into consequent encroachment. Don't look at this opening range gap high thinking that's consequent encroachment because you can see it's different from the low to midpoint between that high. I'm annotating the opening range gap high or previous settlement. So coming down and touching that, if it's bullish, that's something we want to see. Think about what I was outlining when I was showing you opening range gaps. Let me show you what it looks like this. Think about it like the opening is here, previous settlement is here. That's the wrong color, so don't think too much about that orange because I was looking at it as inversion, fair value gap, studying it pre-market. And then the opening up to the previous settlement, which is there, okay? So see 4:14 p.m. at the bottom of the chart, 4:14. And then the opening price here today at 9:30. So that's your regular trading hours. So now if we go over to electronic trading hours, trading above, coming back down into the opening range gap. Because we opened little unchanged. Little unchanged to me is less than 30 to 40 handles. So if it can't even muster a difference between previous day's settlement price and 30 to 40 handles beyond that or away from that at the opening bell at 9:30, I'm right away going to sit on my hands and wait till 10 o'clock. That is one of the things that I want Caleb to do is discern whether or not there's a lot of excitement, a lot of anticipation. A lot of things have happened over the Middle East, and they're starting to heat up over there. So there's a little bit of trepidation right now in the marketplace. So they're going to be probably very fickle in delivery of price today because they want people's sentiment shown, like they want to see what traders are doing after waiting all weekend long. Now here we are, the bells rang, the gates are open, the horses are off the race. Yeah, and how is everyone going to plunk down their money? How are they going to bet? Are they looking for lower prices? Are they looking for higher prices? I think that initially they've offered some selling here to entice traders to want to do that very thing, sell short. I'm not all that terribly excited about doing that right now. I do think if things heat up in the Middle East and over in Russia and Ukraine and China and Taiwan, all those things will be catalysts to spur on more excitement in the marketplace. But right now, I'm kind of weighing out what it's wanting to do initially. So I don't want to have a hard opinion. I like an area, which is the buy side. I want to see if it could give some kind of framework to get there, but it's in no hurry to give me a market structure to work within, back and forth choppiness in here. So the first thing, Caleb, in your rules are, the rules of engagement for anticipating a really easy morning session is, are we opening significantly higher or significantly lower than previous settlements? So obviously today, it's Monday. We know that Friday's where we settled. So when we're looking at the previous day's settlement price, it's Friday's 4:14 p.m. Eastern Standard Time's price. When we pull up the regular trading hours, toggling that down here, that price is the 4:14 p.m. Friday session, regular trading hours. Now, obviously, it trades for another 46 minutes and then closes for the weekend. If it was not Friday, it would be closing for the day and then reopening an hour later at 6 p.m. Eastern Standard Time. So because we had a very small gap, very, very minor gap, that is indicative of a market that's going to be very reluctant to run. And you have to wait, let the market give you more intel. So it helps you control fear and greed, that FOMO, fear of missing something. Every little initial move shouldn't make you feel like I got to be in here. It's doing something. And it gives you a sense of relaxation and not having to be impulsive, which is very, very important as a trader. So if you notice that we have had difficulty, and it wasn't easy for it to get to the new day opening gap of the 21st. So it's banging up close to it, but then fails aggressively. So now we're back on the southern end of that opening range gap. So think about that blue box there. It can work back up in. There's a small little volume imbalance right there. Watch that. Because if we can get back up in to retest the opening range gap low, that means the opening price at 930. If it can trade up into that, it might want to go into that little area there if it wants to go lower. But because there is a very, very weak or anemic gap from previous settlement on Friday to where we opened up at, I've already elected, the protocol is I have to wait till 10 o'clock. I want that full 30-minute opening range, not opening range gap, 30 minutes. So 9:30 to 10 o'clock, we're sitting still. There's nothing for you to do. I don't care if there's a fair value gap. I don't care if there's something exciting that appears in the chart. Because we opened very anemically, it's weak. It doesn't have a whole lot of movement. Now, we were initially, earlier on, we had a really nice potential higher gap opening, but they completely erased that. It got real close to this previous settlement by the time we opened at 9:30. Notice that. So one of the things that you're going to combat most is the want to be in some kind of trading. And especially if you're on social media and watching people like me or watching other people talk about what they are doing in the marketplace. And if you're watching live streamers that have chats, you can see that other people are chomping at the bit. They're saying, I'm long, I'm short, whatever. And I weigh a lot of sentiment with those types of tools. And I view that as a retail indicator. So watching other people's live streams, seeing their level of excitement, or if they're not all that excitement, if they're not excited about something, and I might see a directional setup. I may see something that forms or forming that is maybe bullish or bearish. And then I see a lot of comments and other live streamers saying, and it's not just that, it's other social media venues where if people that are very chatty, they like to share their opinion. The more I have that is the other side of my perspective, the better I feel about the idea. And right now, because of the technicals, we opened weak. It wasn't that big of a gap. I'm not interested in trying to form a hard opinion right away. And it'll help Caleb, and if all of you are watching, that'll also be a solid foundation to build on using the gap, because they can't hide the gap. Obviously, as soon as at 9:30 we open up, look at the difference between the previous day's settlement price at 4:14. You find that on the lower time frames. But I was using the 2-minute chart here, and I was watching how they were using this gap here to see if we could open up with a higher gap. If we would have opened up here, maybe at this new day opening gap or a little bit higher, I would have looked for the move to drop down into the new week opening gap on the 25th, maybe using consequent encroachment, and then try to get a long up into this buy side here. But they took it away and opened us with a really, really weak discount gap. That means it's a lower gap opening. So because of that, the amount of range, and I had one of the students ask me, what does a 20 handle move look like? So see that price here at 19,732. So all the way up to 7,052 even. That is a 20 handle price move or fluctuation. Okay. And you can see it's not much more than that for the opening range gap. So whenever I see a gap like that, I'm immediately, protocol is sit still, wait till 10 o'clock. Wait for silver bullet, wait for something that's more obvious, wait for the first 30 minutes to get in there. The algorithm is going to do what it's going to do in the first 30 minutes. And if I get into a trade, or if I try to elect a liquidity I want to target, I'll tend to be wrong. And I've seen that over 25 years of using opening range gaps and forcing that. So I just am real comfortable letting them have the first 30 minutes. And if it's a big day that I don't want to be a participant in early on, other traders might be positioned for a better short or long that may be beneficial for them holding for the rest of the day. That's okay. I'm not worried about that. I'm not forcing myself to be right. And if you look at this low over here on the 15-minute time frame, there's sell side resting just below that. So if they want to get real animated, they can take it down there. A lot of feedback, very, very positive feedback, which I appreciate. Thank you for that. So I'll drop back into a 1-minute chart, which is standard for us. So you can see right away, it's a little disorganized this morning. It's not real clean. It's a little sloppy. It has a lot of poor price action in it. That is just like the volume imbalance here. We had a volume imbalance there, which you already offered several times. No real gap in here except for the wick. And all of this spotty delivery taking us down below the initial sell side that would have been to the left of us at the opening bell. Falling short of the new day opening gap high on August 21st. So when I'm looking at price and I know that it's moving and I'm not in a trade, when I was a younger man in my 20s, I used to panic about that because I thought every run was going to be a 100-point run and be a big blast off move. Because just like you, when you learn something new from me, you think that it's going to appear in every next candle because now you're keyed up on it. And I felt that way about everything that I was learning from Larry Williams and his books and his videos. And I thought for sure that, okay, he's my hero. I'm looking for this, almost got below that low. The pursuit of finding the new toy in the market. So that way I can play with it. I could use it to make money. And one of the biggest things you can do is learn to go slow. Really, really slow in the beginning, because you're not going to be able to retain some very valuable insights about how you think. And if you go in there and try to chase making money right away, you're not going to pick up on the clues that tell you that you're about to go on tilt. That means you're going to abandon the trading idea that you went into initially. You'll either over leverage or over trade, do more than what's necessary. And it all stems from not having a plan, not having a process of what to follow. And it needs to be very finite, very specific rules. And the first element to that needs to be, when are you going to do something? Time. Okay, so the market's going to deliver based on time, and you aren't going to execute unless you're in a time period, some little envelope in time, like a macro, the first 30 minutes. I mean, it may have to transpire. A few of you actually mentioned you thought that I was making a mistake, and you were correcting me in the comment section. And while I appreciate your enthusiasm about that, the fair value gap that I was annotating on Friday, it did not displace lower from it. So it's not a reclaimed bearish fair value gap. That's why, if you saw the color of it, it was gray, because I wanted to see, does it send price down once it went below initially? It just traded down with wicks. It didn't trade up to it and then displace lower. It went higher, made a higher high, and then I was calling out why that I want to see the bottom of that be used as like a resistance, a premium array, and leave the upper half open. So no, I'm not mistaken. No, you're not correcting me, and I don't mean that to be condescending, but it was a inversion fair value gap because I was anticipating it to do what? I was looking for the market to press up into that event horizon and go into a turtle soup, and I wanted to see it fail at that new day open gap. I remember I was telling you, I said, I'm not going to go long in here, but I'm waiting for it to press up into it. I said, if it's good, if it's really bullish, it will go up and hit that new day opening gap. But we were pressing into that balanced price range, which is going to be more formidable. And when the market broke below that gap, I outlined it real time to you all that it should act as an inversion fair value gap. So no, I wasn't mistaken. But there's logic behind it. This is why I said anybody that talks about inversion fair value gaps or fair value gaps at all, every gap with 3 candles does not make it a fair value gap in the context that you think it is. You don't have all the other tools and resources and experience of reading what the narrative and price action is. Go back and watch Friday's live stream again, okay? And you'll hear there's a lot of things going on with the least amount of speaking. I've already talked more today than I did Friday's whole session. I'm watching the volume imbalance here. We already had one tap into it there. There's a second one. Now, when you go through each one of these live streams with me, whether you're watching it rather live or if you're watching it later on, I want you to really spend a lot of time writing in your journal when you're taking screenshots that the difference, compare the differences of the first 30 minutes of trading with every other day. And when I really make a big glowing remark and start gushing about how pretty and clean price is versus days where it's spotty, a little disorganized. Those are real key things to annotate in your journal because those are the things that's going to be much more paramount for you as a day trader. We just swept that low here in the 15-minute time frame. And we traded inside of an old buy sign of balance, no sign of deficiency, which is right here. Okay. So I'm still working with one laptop. I don't have anything in front of me. I don't have any other screens. I promise, in Jesus' name, I'm not looking at any. I'm literally in my bedroom right now. So my office is upstairs. I have not used that one time since I started doing the 2024 mentorship because I'm trying to help the individuals that have one device, one monitor, because they think that, it only works because I have so many monitors. And that's not true. It's just, I like to look at a very immersive perspective on the marketplace. And I'm also looking at other markets sometimes when I'm using all my screens. So I'm not leaning on that stuff initially for you, Caleb, because you're supposed to be watching price action to get a feel for how price delivers around time. So it's not about picking the right decisions of getting in the right fair value gap and where your stop loss needs to be perfect and short and not have a lot of risk. All those things are later. The first thing is you have to submit to this process of reading price, being in front of the charts, retaining the information as it's being presented. Every single candle, what is it doing? How is it behaving? So I'm watching this wick here. If it can overtake consequent encroachment of that and then come back down, and if it starts showing any kind of support there, that'd be interesting to see get back to the opening range gap low. Otherwise, this is a premium right half of that wick. If it can go up and touch it, or if it fails to even go there and starts to break lower, that's indicating it's very, very weak. And again, we're not even in 10 o'clock yet, so I'm not interested in framing any trades at all. These are all things that you're observing, Caleb. You're trying to make references to these. As you watch price, you want to screenshot these things. Every time I point to something, I'm saying I'm watching this. That's a keyword. I may not say the term, screenshot it as a prompt because I'm trying to talk about something while price is ticking and booking price. But anytime I make a special reference to something, okay, if you go back and you watch the recording and you hear me do that, that is a time for you to screenshot it. And then you annotate what your observations are and what actually happened afterwards. And by doing that, it provides you a way of referencing, logging, and building a understanding of what these things will do in the future when you're watching price action. For instance, like immediate rebalances, okay, where you have a run in price. Perfect example. We have the market stop with a low right here. Then we have a big candle that went lower than the previous candle's low. Okay, it doesn't matter where we're going next. Okay, what I'm saying is things that key up on your attention, that you're saying, okay, there's something going on here. I'm monitoring this. The very next candle is a large candle down, and then we have